Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries of corporate filings, and today we're diving into Huntington Bancshares Incorporated's latest news. It seems like they're making some big moves, and we're going to break down exactly what that means for you. Before we jump in, if you love getting these kinds of straightforward insights from official company documents, make sure you hit that subscribe button. And hey, we've got a growing community over on Discord where we chat about all things finance and business. So check that link in the description below. Alright, so what we have here is a Form 8K filed by Huntington Bancshares Incorporated. Think of an 8K as a current report that companies file with the Securities and Exchange Commission, or SEC, to announce major events that shareholders should know about. It is like their instant news bulletin to the public market. The report we're looking at is dated the 3rd of October, 2025, and it's all about a significant development in Huntington's journey. Huntington Bancshares Incorporated, for those who might not be as familiar, is a pretty big player in the banking world, especially in the Midwest. They offer a wide range of financial services. Now, the main story here is an announcement about a merger. Huntington has officially received the green light from two very important regulatory bodies, the Board of Governors of the Federal Reserve System and the Office of the Comptroller of the Currency. These are like the ultimate referees for big banks in the United States. What they've gotten approval for is the merger between Huntington Bancshares Incorporated and another company called Veritex Holdings. Incorporated, Veritex is also a bank holding company. Basically, Huntington is saying we're officially allowed to join forces with Veritex. This merger, which was initially agreed upon back on the 13th of July of this year, means that Huntington will be the main company that continues to exist. Veritex will essentially be absorbed into Huntington. It is not just the parent companies merging, the banks themselves are merging too. Veritex Bank, Veritex Community Bank will merge with and become part of Huntington's bank, the Huntington National Bank. So on the ground, this really means a bigger Huntington National Bank. This is all part of one big deal, referred to as the mergers. This is a huge step. Getting approval from the Federal Reserve and the OCC means that all the major regulatory hurdles for this deal are cleared. This is often the most complex part of a big merger, making sure that regulators are comfortable with the consolidation and that it will be good for the financial system and consumers. So, when can we expect this to be official? The companies are looking at the 20th of October, 2025. That is when they plan to actually close the deal. Of course, there are always a few final details to wrap up, what they call closing conditions, to make sure everything is perfectly in place before the ink is truly dry. And just to round out the approvals, Veritex shareholders also gave their okay to sell their company back on the 22nd of September. So pretty much everyone who needed to agree has agreed. This report includes a press release that has more details about this announcement. It is attached as an exhibit. Now, like most of these filings, there is a very important section about forward-looking statements. This is standard legal language. What it means is that some of the statements made in this report might be about the future, like what they expect to happen with the merger. Companies have to say these kinds of things to protect themselves legally because the future is never 100% certain. They're saying that some of the things they discuss, like the expected benefits of the merger and when it will be completed, are based on their current expectations and plans. This is the core of it. They're cautioning that while they expect certain things, actual results could be different because of a bunch of risks and uncertainties. These could be anything from broad economic shifts to specific issues that pop up during the integration of the two companies. And they go on to list a whole lot of potential factors that could affect their future performance. It's a pretty extensive list, covering everything from general economic conditions and inflation to things like geopolitical instability, changes in US trade policies, and even the impact of pandemics or other catastrophic events. Here is a really interesting point for the times we're living in. They're specifically mentioning the impact of bank failures and financial market volatility. This could mean higher regulatory costs like special assessments from the FDIC and potentially needing more capital, which is like the safety cushion banks need to have. This is a direct nod to the banking turbulence that we saw in recent years. They're also concerned about depositors pulling out large amounts of money that aren't covered by deposit insurance. If that happens, they might have to sell their investments really quickly, possibly at a loss, which would hurt their financial health. Interest rate changes are another big factor. If interest rates go up, the value of their existing investments in bonds and other securities typically goes down. If their investment portfolio takes a hit, people might start to worry about the bank's stability, and that could lead to more money being pulled out by depositors. It is a bit of a domino effect they're worried about. And of course, cybersecurity. In today's digital world, protecting customer data and banking systems from hackers is a huge ongoing challenge for all financial institutions. They also foresee competitive pressures, meaning other banks might offer better prices or services, forcing Huntington to adjust its own offerings. This is a big one. They're talking about how decisions and regulations from government bodies, like those stemming from the Dodd-Frank Act or Basel III capital rules, can impact them. These are complex regulatory frameworks designed to make the financial system safer. They are also prepared for the possibility that something unexpected could happen that might cause either Huntington or Veritex to walk away from the merger deal. And finally, they're being upfront that the merger, even if completed, might not bring the benefits they're expecting, or at least not as quickly as they hope. Merging companies is incredibly complex, and often comes with unforeseen difficulties in combining operations and cultures. For anyone who wants to dig even deeper, they point to their most recent annual report, the 10K from the end of last year, and their quarterly reports. These documents are like the deep dives where you find all the detailed financial statements and risk factors. Moving on, this section of the report is about exhibits. It is basically a list of supporting documents they're providing. As we mentioned, Exhibit 99.1 is the press release that contains the official announcement about receiving regulatory approval for the merger. Exhibit 104 is related to the digital format of the filing. It is for something called XBRL, which is a way companies report financial information digitally, so it can be easily analyzed by computers. It's like a special language for financial data. And finally, the signatures. This is where the authorized people at Huntington Bancshares Incorporated officially sign off on the report, confirming that the information is true and accurate to the best of their knowledge. Here we see the signature of Marcy C. Hinkst, who holds the title of General Counsel. This means she's a top lawyer for the company and is confirming the validity of this report. The date here is the 3rd of October 2025, matching the date of the filing. So, what is the big picture here? Huntington is making a significant move by acquiring Veritex. This merger, with all major regulatory approvals now in hand, is poised to close by late October. This is a strategic play by Huntington to grow its footprint and likely its customer base and market share. The detailed risk disclosures highlight that while this path is approved, the integration process and the broader economic environment present challenges. Huntington is essentially telegraphing that, while they jumped over the regulatory hurdles, the hard work of merging two large organizations and navigating economic uncertainties is still ahead. For investors and customers, this means paying close attention to how smoothly the integration goes and how Huntington navigates the risks they so clearly outlined. Does this merger position Huntington for stronger future growth, or will the complexities of integration and market risks create headwinds? Only time and future filings will tell. Alright, that is our breakdown of Huntington Bancshares Incorporated's latest announcement. What is your take on this merger and what it means for the future of Huntington? Drop your thoughts in the comments below. If you found this deep dive valuable, please hit that like button, it really helps us out, and subscribe for more corporate breakdowns. Don't forget to join our Discord community for more discussions. Thanks for watching, and I'll see you next time.